I'm Danny LeBeau. Welcome back to the Fourth Revolution, where we discuss stocks for your portfolio of the future. So we talk about the balances between supply and demand in spaces where demand is going to outpace supply for the next decade in the roaring 20s. And we like we all know, we had 10 years of digitalization in a matter of 10 months during this pandemic, as society was forced to utilize the ease and convenience of advancing technology. And, we had a proclivity towards it. This proclivity is only going to grow as our society becomes, adopted to this digitalized economy that's been created for us. And, we've never been more conditioned to utilize e-commerce, digital devices, cloud computing, and the plethora of other fourth industrial revolution technologies that have just taken off over the past 18 months. So today I'm talking about 3 stocks that have this demand tailwind behind them, and they are poised to explode in the next decade. And they're great buys for this inflationary environment because they have that pricing power. So let's dive into these stocks and take a look at where they're trading today. This is Taiwan Semiconductor Manufacturing Company on TradingView.com, and the ticker is TSM. This company is the largest semiconductor manufacturer in the world, fabricating over 56% of the world's most innovative chips. They're trusted by the biggest and baddest chip innovators, including NVIDIA, Apple, Qualcomm, Skyworks, and the list goes on. Even Intel, who fabricates their own chips, is now forced to utilize TSMC's manufacturing capabilities because they just are unmatched in this field. They're the only ones working on the atomic scale, literally looking at 3 nanometer chips and lower, and this is on the atomic scale. An atom is just half a nanometer, which is very close to where Taiwan Semiconductor Manufacturer is able to get these transistors. They're able to put tens of billions of transistors on a chip the size of your thumbnail. It's absolutely incredible how much technology and how much advancement this company has driven into the chip space. And as demand outpaces supply, we're seeing a massive global chip shortage. TSMC is well positioned not only for pricing power, but for an increase in long-term revenue as they increase their capacity to manufacture these chips. And this stock had been trading well below its intrinsic value, and I'd been a big advocate of this company back when it was trading $40 a share. And I was buying it up on this dip, and it didn't even dip that much. It dipped from 60, down to 42, 43, and it was an absolute buy any time before 2021. And today I think it's a buy because this demand for chips is going to continue to outpace supply. And like I said, no one matches Taiwan Semi's capabilities as far as fabricating goes. And back in the day, they thought this was just another commodity company, but it is so much more, and they have proven that over the last 4 quarters, and they will continue to do so going into the roaring 20s. This is a long-term pick that I would hold for the next decade. Skyworks Solutions, ticker SWKS. This is their chart on TradingView.com. This company is ushering in the next generation of 5G technology, and they are driving this technology to no end. 5G is a crucial component of this fourth industrial revolution as they connect everybody everywhere. You can see the stock kind of traded lower off of their earnings in late April, and a lot of the broader tech market fell into mid-May, and that was where we found a lot of bottoms. And Skyworks is no exception to that. We had a nice bid, and recently, last week or 2, Skyworks has caught an enormous bid from investors and analysts getting excited about iPhone 13. And this is expected to be released this fall as Apple, launches their second 5G phone, and Skyworks is supposed to be their RF chip in that next generation phone. So if Skyworks is not only a chip for mobile devices, it's also in a number of Internet of Things technology, which is just proliferating in this digitalizing economy today. I think the stock is a buy now, especially as the demand for chips explodes in this global chip shortage that we are experiencing. And Skyworks is going to have that pricing power that a lot of other businesses do not. I think moving forward here, this demand for 5G technology and mobile connecting chips is just going to continue to take off. Skyworks is positioned to benefit heavily from this, and I think their stock is a buy today. I'm looking at price targets north of $200 a share, so I would not hesitate to pull the trigger on this as a long-term chip buy. Fedex has traded effectively sideways since the beginning of the year. And comparing it to its, duopoly competitor, it has underperformed significantly over the last 6 months. Underperforming by over 10%. And I think this is an opportunity to buy up the largest express fleet in the world, and that is FedEx combined with TNT Express, which is their European subsidiary. And if you can look back all the way down to the pre-pandemic levels here, the stock has boomed off of these levels, and it's because of that demand that I was talking about for e-commerce and packages. And this is a demand that is not going anywhere soon, because this world that we live in is driven by digital commerce, and we are only going to see a bigger and bigger chunk of sales come from online vendors. So just looking back at the charts here, we'll take a little bit of a recap. I talked about this last week, but we'll dive into it one more time because it plays into the supply and demand issue, and solution to that issue, a little bit more than you would think. So since 2018, we had margin compression from its TNT Express subsidiary, which it bought back in 2016, but it really saw some systemic issues over the last 3 years or so. And, we hit this below $90 a share bottom, and that drove us all the way back up over 3 times that pandemic low price is what we're trading at today. And I still think it's a value. I think we're trading at not only a significant discount to UPS, but as at FedEx's express services begin to take off and its European subsidiary TNT Express really begins to gain traction, because those systemic issues have primarily been ironed out, and that margin compression is no longer a concern for investors. It's more of an exposure to international markets. So I think that we have a good play here in this recovery world. We had a roaring first half of 2021, and going into this Q3 season, I think that we could see some tumultuous volatility re-enter the markets as Q2 earnings hit the fan in the next 2 weeks. And we're going to see these big tech earnings at the end of July and into August, and I think that could incite some of this volatility that has exited the markets. And I think we need this. We need a little bit of a pullback in these equities, and we have so much sideline cash. Goldman Sachs cited $5.5 trillion in money market funds just waiting to be deployed on any dip. And I don't think we're going to see anything more than a 5% to 7% dip. So I think there's just way too much cash on the sidelines buying up every little opportunity for this market to go any lower. So don't forget to check out Zacks.com/promo, where we have 4 ultimate picks for Q3. And I'm actually one of the picks along with 3 other senior analysts here at Zacks. So don't forget to check that out at Zacks.com/promo. Thanks, guys.